All right, and we're live. So hi everyone, and welcome to this webinar about how to enter the UCITS ETF market. And on the line today, we've got myself, Jason, and Brittany. We'll go through some brief introductions quickly and then talk about the agenda for today. So Jason, do you want to start with a brief intro to yourself?
Yeah, no problem. Thanks for tuning in, everybody. I'm Jason Griffin. I'm Director of Capital Markets and Business Development at HANetf. I've been at Han for 5 years, in the ETF industry for 15 years.
Hi, I'm Brittany Christensen from Tidal Financial Group, Head of Business Development here. I've been in the ETF industry for 5 years now.
Good, and I'm Alex Berg. I'm the founder of Index One and been in the index industry for about 4 years now. So let me just pull up our initial slide, which covers the agenda. So we're gonna first make a few introductions more in depth to all of our respective companies here on the webinar, talk a bit about the growth of the ETF market in the US and in Europe, some of the market trends, tax advantages around ETFs, the process from an idea to an index and an ETF, and some advice for players looking to enter the ETF market. And finally, some Q&A. And just as a practical point, if anyone listening has any questions around the material or anything we say on the call, you can just put it in there should be a question box to pop that in, and then we'll go through it at the end of the webinar. So let me just begin by giving a brief introduction to Index One. So a bit about what we do. So we're a custom index provider in essence. And if I were to explain it in one sentence, we help turn investment ideas or investment strategies into indices. And how we do that is through a more technology-enabled approach. So we've designed the tools required to firstly design index methodologies, backtest those different methodologies, and then run the live calculation, rebalancing, and dissemination of indices. We've been in the market for over 3 years now. We do primarily equities. We calculate over 100 different types of indices for primarily not ETFs, but various different use cases. And a bit about our process. So as I mentioned before, we are primarily a tech-enabled provider. And the real sort of question we try to answer in this market is essentially how can we minimize the human input required to design, build, and maintain indices. So a lot of this we deliver through a software-based approach, which allows for the design of a new index from scratch, backtesting, validating some of the results, running various iterations and simulations on various time periods, and then the live calculation and ongoing rebalancing, which is one important point, which has been historically quite difficult to automate and run in a smooth manner, which is something we've done on our end, and also automating a lot of the core production, treatment, and other dissemination and other points that are important to running indices in a cost-efficient manner. So just some kind of main points around our solution and our sort of strengths in this market. Firstly is the speed to delivery. We can design, backtest, and build a live index in as little as a few minutes. In most cases, it does take a lot longer than that, ironing out various things with the data and defining, the strategy that will ultimately be the live index. Pricing is an important point as well. We put a lot of effort into automation, and as a result, we can run indices in a very cost-efficient and scalable manner, even for smaller use cases where it might not be feasible to pay large sums of money for an index. Customization is an important point. I know with a lot of indices, there's challenges around, for example, rebalancing frequently, which is something we can do as frequently as daily or intraday, using third-party data sources, new types of data in the market. That's something that's possible through our platform. And almost most importantly, the ownership of the ultimate index. We believe it should belong to the creator of the IP, the creator of the investment idea. So rather than us building and licensing out indices, we simply charge for a calculation, and whoever has created the index or the strategy is the ultimate owner of that index and the licensing rights. A bit about our backtesting tool. This has proven to be a very useful tool for a lot of our clients. Even if you're just prototyping an index, we have extensive stats on what kind of exposures you have during the backtest period, volatilities, drawdowns, turnover, and we also support very fast iterations of different types of methodologies, which has proven to be very useful. Next, I'll hand it over to Brittany to talk a bit about Tidal and their role in the market.
Thank you, Alex. So Tidal Financial Group is a US-focused ETF white label firm. And so, obviously the US ETF market is heavily crowded. It's very complicated. So helping people get into launching a product can be really challenging to navigate, and historically has had significant barriers to entry. That's sort of the genesis behind where white label firms came from, like ourselves. As you can see on this ecosystem slide, the US ecosystem for ETF support is very complicated. There are a lot of different players that have to be basically operating as a cohesive unit in order to function, in order for the ETF to function as it should. So we essentially designed our business to handle all of the other boxes so our clients can do what they do best, which is come up with investment IP, and then explain to investors why their IP is better than other products that they could be leveraging in their portfolios. As it stands today, we've helped launch or are touching roughly 120 different funds across basically 55 different issuers, with a total of 8 billion in assets under management. The majority of the ETFs on our platform are active, but we do have a number of passive products as well. And we are, well versed in all of the various asset classes and portfolio strategies that can be brought to the US ETF market. The way that we generally think about Tidal's offering is in these 8 different buckets. So usually we first start with the strategic planning assessment. This is something that we do for free. We generally get in, have a deep dive conversation with prospects that we're speaking with, get a good understanding of the capabilities within their firm, as well as the idea that they're planning to bring to the US market. And then we put that against, all of the other ETFs that we have seen, all the other ideas that we have seen, and we sort of evaluate, their capabilities at that point in time, and highlight what will be, natural success points for them in the ETF space, and also discuss what could potentially become hurdles, right, to success. So the reason we do this right up front and first is because it can be really challenging, and we have a good insight based on the broader industry as to what you might be able to charge, what kind of effort you'd need to put into marketing and distribution of the product, as well as where you might need to be strategically thinking about hiring individuals to fill certain roles to support the product offering. From there, once someone's ready to go, we obviously have 40 Act Trust, 33 Act Trust capabilities. We handle all of the board management services, all of the board meetings, all of the minutes, anything that related to kind of managing the 40 Act Trust element we offer. We do the fund operations, so making sure all of the bills get paid, making sure any of the various vendors come to us first for any operational issues with relation to the fund. We do regulatory and compliance. So obviously ETFs are a heavily regulated space. So we take on that burden for our clients, making sure that the ETF isn't breaking any rules. And then on the bottom part of the slide is what we really think differentiates Tidal from some of the other white label service providers in the industry. We do active portfolio management and trading execution services. So whether you're active or passive, you can outsource the trading of the ETF to us. So this means that, we will handle intraday trades for creations and redemptions. We'll talk a little bit later about the tax advantages, but this is essentially where the tax optimization framework happens for us to kind of help rebalance a portfolio in the most efficient way possible. In addition to that, it's also about our capital markets offering and our relationships across the market making community that helps stand up liquidity in the ETF market. We offer a number of tools for marketing, research, and sales and distribution that basically are enablement tools that help our clients grow once they have launched their ETF. And then the last, I'll dive deeper into that in just a second. And the last piece on the slide is fund financing, right? So this is us kind of stepping in and helping wear some of the burden of the startup costs of an ETF. So our clients can feel better about entering the market with a little bit less of the capital intensivity of launching. This is a slide, and obviously we'll circulate these slides after the call, but this is a slide that sort of highlights the variability and the variety in the different tools that we offer to help a fund grow post-launch. So anything from hosting a Twitter space, to recording videos such as this one and repurposing that for marketing content, social media campaigns, email campaigns, all the way to sort of one-on-one meetings, right? And certain things make sense at different stages of AUM growth. And so we work closely with our clients to understand, where are they going to start out from an AUM perspective and what are their main goals and where they want to get to. So we can navigate mid-level, focusing more on retail, entry level, and then a transition into mid-level where we target maybe, mid-size RIAs and some of the intermediary community up to, once the fund has achieved certain milestones, how do we navigate getting that ETF supported on some of the national accounts platforms? So from there, I'll hand it over to Han.
Great, thanks, Brittany. As you mentioned, we will hand out these slides over email, or you can come to us after the call. You may actually be able to find on the right-hand side of your screen, I think there is a section where we have left these slides. If not, as I say, just send us an email, get hold of us, and we'll get them over to you. Obviously, you can go to our websites as well to find and download other information. So anyway, a little bit about who we are. This is our founders, Nick and Hector's. It's their fourth ETF business. They were part owners and founders of ETF Securities, which they grew to about 30 billion. They went on to then a second business, Boost, which is an inverse and leveraged provider. And then finally with WisdomTree, they were part owners of WisdomTree. And then the WisdomTree finally bought them out. And they were sort of left with, well, what's next? And that's where they came up with the idea for for HANetf. I mean, I guess the idea was to help new entrants into the ETF market. I mean, people like Tidal were probably around at the time as well in the US, and we've seen it growing in the US. People want to get into the market, reduce cost, save a couple of years of the time it takes to figure out the market. The ETF market is quite complex. There's lots of moving parts in there, particularly with the market makers, the APs, and all this stuff that we talk about in the ETF world that perhaps you're not familiar with. So that's where they came the idea. But yeah, let's help new entrants into the ETF market. So a little bit about some of our milestones here. We've got the first fund out 5 years ago. So we're the oldest ETF market. The oldest white label player in the European market. First fund was out then. We've had some pretty cool partners. You'll see the Royal Mint on there. They're a 1,100-year-old organization. We built them a gold ETC, which I'll talk about a bit later. So we're not just ETFs. We have quite a broad platform. I'll talk about a bit later. And then various other thematics in there. You'll see quite a few interesting thematics there, interesting tickers as well. And some great success stories are, for example, our uranium miners product only launched last year, and that's already hit 160 odd million. So, and it only started with $1 million of seed as well. I'm sure that's a question that comes up a lot. Is how much seed do we need to start an ETF? Well, you can start with $1 million. It's hard work getting to our first 10 million, but we're happy to help you with that, which I'll explain a little bit later. So a little bit on our product range there. As I say, you can look at this. It's quite a complex slide. You can look at this at your leisure later. But we've got about 45 products we've launched, 2.6 billion in assets. So what do we do? I mean, most of it's pretty obvious. Brittany talked to this a little bit. We help you with the whole product development life cycle of building the ETF and ultimately getting you to the exchange and ringing the bell. Happy days there. We can work with people like Alex. If you need help with an index. We help with that sort of creation side of things. And then after we've rung the bell, hard work starts. We take care of everything else, product management, which is all the oversight of the third parties, the regulatory oversight, all the regulatory burden that Brittany referred to. UCITS do come with quite a high regulatory burden, but that's the beauty of them. They are passportable right across Europe. They're about the only structure that is. So it's great. They're retail friendly, but it does come with a bit of a sort of regulatory burden. We take care of that. All the capital markets piece, which again is where we get most of our questions, is I think people from the fund world kind of get what an ETF is. It's just when it comes to the market making, the exchanges, the spreads on the screen, helping clients with execution. Why can I only see so much volume on the screen? What's the true liquidity? All those things. We're taking care of all of that for you. And then we do have two options when it comes to distribution. Either you can take care of that because that's what you do, and you've got retail distribution, or you've got distribution in Europe. Or we can help you with that with our enhanced service. So either we have our core service where we just take care of the first two columns there, which is the day-to-day oversight, or we can help you with distribution as well. So if you don't come to Han, what are the other options? Many of you may be thinking about this at the moment. What's the best way to get into the ETF market? Do we buy our way in? Well, the trouble with that is it's quite scarce. It's quite tricky to find anyone left to buy. Most of them have been snapped up. I don't know if you saw Cathy Wood's ARK bought Rise just recently in Europe. There's just not many opportunities there. You can build from scratch. Now that's absolutely fine. You'd get there, definitely get there. You can have smart enough people to work it out, but you will spend a couple of years, get into the start line almost, and then even when you get there, you'll think, "Crikey, I wish I knew all this at the start." So we take a lot of that out for you. All that opportunity cost you can learn alongside us by partnering with us. The other thing you can do is you could think, well, hey, I've got a great strategy. Maybe I'll partner with an existing large provider, big name. Again, yes, you can do that. But, generally they take control. They have more control over the assets. And ultimately, if you do fall out or part ways, they do end up keeping the assets generally. So a few things to think about there. Again, lots of detail on the slide if you like to take a look at your leisure. So just a quick overview here. I think people sort of think of Han as ETFs, which is true. That's only sort of the left-hand side of it, which is anything that's UCITS eligible, we can build you a UCITS ETF. Now, clients come to us with other ideas. They may want to do, physical silver or platinum, palladium. That doesn't fit into a UCITS ETF because it's not diversified. It's a commodity, can't be held in UCITS. So we have an ETC platform where we can build you that. And that's where I mentioned the Royal Mint earlier. We did that gold ETC for them. And then we have a third platform where you can do pretty much anything. It's multi-asset, so equities, fixed income, commodities. It can do leverage. We can do 4 times Tesla if you like. We can do covered call Tesla, all sorts of things. We do crypto, digital assets. So that can do pretty much anything for you. So depending on what your strategy is, we generally have a solution for you. Just to delve a little bit into the UCITS platform, again, people assume that our UCITS platform, the only option is to be on our commingled platform. So at the moment, our clients are on one ICAV. So we issue a sub fund for each client. That's the most efficient way to do it. It's the most cost-effective way to do it. And you're immediately on all the broker platforms, got all the AP stand-up market makers. But that doesn't always fit everybody. So we do have conversations, and we are in the process of building for one client an exclusive platform. So this is where we build you your own ICAV, and nobody else will be on that ICAV, just you. The advantage of that is that you could, if you do think you're going to enjoy the ETF industry in 5 years' time, you can take that platform away. It's easier to decouple that platform from HANetf. If you're on our commingled platform, you can always do UCITS merger. That's fine. You can still take the fund away. That's absolutely fine. It's just that with a whole platform, if you're going to do 5, 6 ETFs and take that to 10 and take that in house, then maybe the exclusive platform bespoke for you is the way forward. But it obviously comes with slightly higher cost because you're not availing of the scale that we have on our commingled platform. I think I mentioned slightly a bit more detail there. The 2 main services we have is our sort of standard or core service where we take care of the day-to-day operations and oversight, capital markets, and then the enhanced service where we give you all that. Plus, we help you with marketing and distribution. We have about half the company in marketing and in sales, about 10 in marketing, 10 in sales. So we're doing marketing, digital marketing, webinars, events, all those types of things, trying to help maximize your chance of success once you build the product. So we can offer both of those services. So some key takeaways there. Obviously, speed to market. We can get you a fund out in 12 weeks, 10 to 12 weeks actually. Got the expertise, 300 years of experience. We can help you with get your strategy to market and hopefully sell, have some success with that. And obviously, the main reason we're here is why we want to launch is to get into that ETF market. ETFs is great. You can list them across different countries. If you list in Italy, for example, you look local. You look like you're part of the ETF, local ETF industry. Journalists cover you. So that's great. They're just like water ETFs. People are buying them from Asia, or you get calls from the Middle East, get calls from Latin America. People buying UCITS ETFs. They're on exchange, so everyone can see them, buy them, access them. So yeah, they're a great way to reach different channels you perhaps aren't reaching today. And I think I'm pausing there, Alex, getting to some other questions. I think we've seen some for the audience and also some topics you wanted to cover. Sorry, Alex, I'm not hearing you.
Alex, I can't hear you.
Sorry, I was on mute. Yeah, so thanks both for the introductions. And the next thing I think is worth talking a bit about is just the growth in the ETF market in the US and in the EU. Anyone who's familiar with the space obviously knows that ETF assets are growing at a fairly consistent pace, but might be worth just going through the numbers kind of you have on your end and any kind of specific niches that you think are perhaps growing faster than others. So maybe, Brittany, do you want to talk a bit about the US market to begin with?
Absolutely. So the US market hit an important milestone actually in the month of October. And we just passed 3,300 ETFs in the US market. As it stands today, there are 3,322 ETFs, I guess, as of last week, across roughly 300 different issuers. I think a lot of the perception of the US ETF industry is that it's heavily dominated by obviously the 3 main players, BlackRock, iShares, and State Street. But what we've noticed in the last couple of years, and it's really been spurred by regulatory changes that occurred in both 2018 and in 2020, that have essentially lowered the barrier to entry for ETFs in the US. In particular, active funds or funds that leverage derivatives had significant regulatory hurdles removed through some recent changes from the SEC. This year alone, there's been roughly 475 ETFs launched, with roughly 7 trillion in assets, generating about $11 billion in revenue. So there's a lot of growth that we've already seen, and it's expected to continue, as you can see on this slide. And numerous financial publications, the market is expected to grow to 50 trillion, within the next 10 years or so. We've seen the growth right alongside the industry, right? Both of these slides kind of show this general hockey stick of funds launching. So I think it's a good time. It's still growing. There's a lot of important metrics that we publish from our research team here at Tidal. We publish weekly KRIs so people can see, how many funds have launched the last week, how many funds have closed. An important metric that we often capture and talk about is the open to closed ratio. So as of last week, it's hovering, right around 2.28. So that is, 2 launches to every, 1 closure, roughly. And we can talk about how Tidal helps funds not close, right? You can see on the bottom of this slide, our launch to closure ratio is relatively skewed. The majority of our funds are still alive today. And we think that's because of some of the things that Jason mentioned when he was touching on, the various options to enter the ETF market are not that fundamentally different between Europe and the US, right? You can build it, you can buy it, you can, or you can outsource it. And I think, increasingly outsourcing becomes an option that is more attractive as things continue to grow and as new people enter the space, because we've obviously built up a lot of the expertise ourselves. I'll hand it over to Jason to cover growth in Europe.
Yeah, thank you very much. Look, Europe's, depending on which stat you look at, Europe's probably 3, 5, or 7 years behind the US, but we have exactly that same growth. That's sort of bottom left to top right. I think it's a 20% CAGR we've had for 20 years now or something. When we started Han, I think European assets were about where, the European assets today are about where the US was when we started Han. So that Han was 5 years ago. So that sort of demonstrates it is about 5 years on the AUM, but certainly seeing a lot of growth, a lot of interest. We've had something like 1,300 or so discussions, not with individuals, but with different organizations around the world who are looking to build ETFs. All right, there's some time wasters in there for sure. People who think they've got alchemy, and people think we should be paying them to launch an ETF with them. But yeah, we've had all these conversations, and then just so many tailwinds in the market. Regulatory tailwinds. In Europe at the moment, the retail market's been pretty nascent compared to the US market. In the US market, everyone seems to know what an ETF is, have them in their pension plans, their 401k, they talk about them. It's less so in Europe. It's probably more like 10, 15%, but that's really starting to grow, that participation by retail. The German savings plans have sort of proved that. Millions of savings plans opening, and they're mostly buying ETFs. And then just things in the news recently, even this year, with like I mentioned earlier, ARK taking over Rise. That really wakes people up to, maybe the ETF wrapper really is something. It's not just a low cost passive. It really is just a wrapper, and it can, you can have anything in there. You can have, 3 times Teslas are mentioned in an ETC. So yeah, with ARK buying Rise, then JP Morgan's been converting some smart beta funds into active funds. You got AXA came to the market. HSBC is doing some interesting things as well. So just generally, the ETF market is in the news a lot more than it ever was. And I think people are just really waking up to the fact that ETFs probably are the way forward. It is going to be the wrapper of choice. I think we're going to talk a little bit about tax benefits later, but yeah, maybe let's leave it there for now.
Yeah, I mean, just on the growth, I mean, I think all of us were operating sort of on the new launches side of things, but when you look at what's making headlines is the total AUM number. So, what are your thoughts? I mean, on new AUM from new launches, or is it going to be the established, ETFs that are gonna move the needle, so to speak, on the AUM growth to 50 trillion, or a mixture of the two?
Yeah. I'm happy to take that. So obviously in the US, mutual funds have been heavily leveraged as sort of the 40 Act product for a number of years. I think we'll continue to see, product evolution in the ETF space. I also think we'll continue to see replication products from different managers, right? As bigger mutual fund complexes recognize some of the tax advantages, like we've mentioned, in the ETF wrapper, they're continually looking at this. Seems like a better option for our clients to be invested in. So navigating that is really a phenomenon, and converting a mutual fund into an ETF that's really only a couple years old. And so things do move quite quickly in the ETF space, but I think that there will be a massive amount of existing managers who are running other 40 Act product who eventually move to, as Jason said, the wrapper of choice for the future. Whether they do it via conversion, whether they do it via, a slightly differentiated product to the mutual fund, somewhat varies depending on their preference. But that's I think a big portion of where that expected growth is to come from.
Yeah, I totally agree. I mean, it might be slight exaggeration, but certainly when I've been over in the US, it feels like the mutual fund's almost dying in the US. But the massive conversions, dimensional. They're like 100 billion ETF manager now. They're just a mutual fund manager, and then they converted 80 billion, and then they've converted more. Fidelity's done the same. So you're seeing these conversions, in the US, and that just gets people comfortable with the wrapper. And so, even though that's not Europe, it just means buyers of people who want to take a strategy and investment proposal from a client, from their favorite manager. They're getting much more used to receiving that package as an ETF because of everything that's happening in the US, and so that's spilling over into Europe, for sure. And in terms of where the assets are going to come from, so those conversions, I think it's just a statistic where I think most of the money goes into funds that are at least 10 to 15 years old. So certainly, the massive ones that have been there, the big sort of beta building blocks, your S&P 500s and that, they're always going to take the massive flows. But then, there's new innovation coming all the time. We can talk about trends in a bit, but we're seeing some different strategies, interesting strategies coming out, and suddenly they go from people never hearing of them to there's being 10 billion in those similar strategies. So there's always room for new. Active's going to drive that for sure. Or active-like strategies. We've talked to a lot of people who are active managers, but they want to launch a quant version of it, or they want to make it as rule-based as they can, but still keep the same. Still keep the same team view. They're not going to change the way they operate. If they're a value buyer or quality buyer, whatever it is, they can still keep that DNA, but then just do more of an index version, which I'm sure, Alex, you're talking to people about that. So we have clients trying to convert somewhat active strategies into an ETF, and even some of our thematics feel a bit like an active strategy. When you hear our partners talk about their thematic products, they do talk about it with the passion of an active manager. The index chooses this way, it filters out these types of companies. We don't like these types of companies, so we filter these ones out. So it does sound like an active strategy. So it's, in summary, I think big numbers are still going to keep coming from the traditional 10, 15-year-old ETFs, but there's lots of opportunity still out there. We're seeing it, in the US, and then things spill over here.
Yeah.
I think one last point to make, if I may, is really about the investor shifting too, right? To wanting maybe more control, or maybe easier entry and exit in positions. Obviously, the ETF offers that in a much easier capacity than many other structures. So I think it's also a piece of that that's fueling the growth.
Yeah, I think the modern generation, exactly bang on there, is totally agree with you. Is if you're logging onto your brokerage account and you're buying a bit of Marks and Spencers or Tesla, it's quite handy to buy your fund at the same time. Whereas if you've got mutual funds, you've got to log onto a different platform. You may be on 5 or 6 different fund platforms. You've got to log on different platforms. Then you've got to worry about where's my cash? Actually, I've got to move my cash from one account to another. Whereas when it's all in one place, it's the modern investor, the modern generation. I hate to say it, but like the Amazon Prime, just want instant gratification. I want to buy an ETF. I want the price now. I don't want to. Like if you buy an Asian strategy mutual fund on Thursday, you get Friday night's NAV. You find out Monday morning. Well, that just seems bonkers to me. Just why can't you buy and sell as you see fit?
Yeah, for sure. So yeah, the next topic I think we wanted to go over. We've established kind of the growth in the market overall, but just in terms of what are the trending kind of new launches that we're seeing. I think we all have a slightly different perspective, depending on what market we're in or who we're speaking to. I can maybe start by just giving my view from the sort of indexing side, what kind of queries we're getting, what type of new indices we're developing. There are a few things I'd like to go over. I mean, if you go back, several years, there have been certain trending categories like smart beta, then ESG, thematics. I think what I'm seeing right now more of is more active, and I think one kind of misconception around active versus passive is a lot of these strategies that investors might see as active are actually systematic and can be packaged into a index type of product. So a lot of the indices we're currently working on and getting queries for, they're quite sophisticated, maybe daily rebalanced products that are, very active strategies. They're just set up in a rules-based type of way. Another major thing is around the factors, which we've noticed in the past few quarters, is I think a lot of market participants are starting to rethink what factors actually look like. So initially, you think of like a traditional Fama French 5-factor, size, momentum, growth, volatility. But I think a lot of these are, firstly, not necessarily measuring what they're supposed to be measuring, and they might not be fit for the current market environment. So we've had a lot of conversations around alternatives to these, specifically just alternatives to measuring, for example, momentum. So rather than using a fixed look back window, it might be a sort of sliding window or an asset specific kind of life cycle stage based momentum factor. And same for size, rather than measuring it towards the overall market, it might be to work against peer groups. So I think a lot of these ideas, are turning into quite interested and sophisticated indexes and ETFs as well down the line. Final thing I would say is around just better use of alternative data. So we've got a lot of queries come in around using, for example, sentiment data. I think there are not many products in the market at the moment that use sort of a sentiment-based weighting or screening in the asset selection process. AI is coming up obviously a lot as well. Whether or not there's going to be kind of a strong sustainable use case, I think remains to be seen. But I think that's the main thing from my side. I mean, to me, it looks like the market is still kind of in a discovery phase. People are trying out new things, launching new types of ideas, and it just remains to be seen like which ones are going to take off. But I guess, yeah, Jason, from your side, do you have any thoughts around trending themes or new types of ETFs that are coming to market?
Yeah, sure. Yeah, I agree with you. The industry's been around 20 plus years, but it still feels super young and vibrant, and people come up with new ideas all the time, all sorts of interesting stuff launching. We're seeing a lot more strategies that have options embedded in them. So covered calls on indices. So you might have a standard index product and then call overlaying strategy to generate extra yield. Even seeing that in the US on single names. You couldn't do that as a UCITS here in Europe. We'd have to build it for you on our multi-asset ETC platform, but we could still nonetheless do that for you. But options on options on single names. Seeing that downside protection. So in the US, there's a lot of these buffer funds that give you, say, protection between 20 and 40% downside protection. They went from nothing to like 10 billion or more. So seen a couple of those just start to appear here in Europe. So yeah, things are definitely moving forward in that innovative space. But lots of exciting stuff going on. I mean, thematic still there for sure. And but I think really the simple beta building blocks. I think that race is sort of won now. I think people are looking at these new strategies and things like the other one seeing quite big stuff is also wrapping single bonds. So I don't know if you've seen the US, they've got some clients, some issuers that they buy the on the run 3-month treasury, for example. It's a bit like tokenization actually. You can then buy the on the run 3-month treasury for like maybe the issue at $1. It just doesn't have the blockchain behind it, but it looks like tokenization. You can buy it for $1. Savings accounts, you can invest in ETC. You see these in Canada and places where you get super high interest, access to super high interest rates compared to what you're normally getting in your brokerage account, which is probably next to nothing. But then you can buy some ETCs, and they seem to have gathered an awful lot of assets as well in places like Canada. So yeah, seeing lots of innovation coming over from the other side of the pond, the US and Canada, and it's starting to start to see the green shoots of that here in Europe.
Yeah, I would echo. Options is the biggest trend, I think, of 2023 from the launches that we've seen. I think it's that coupled with yield, right? Tidal helped launch the Yield Max suite of ETFs that have been a massive success. Jason kind of touched on, single stock option strategies. These are specifically targeted to print, very high yield that you can't even achieve in the bond market. So I think you're seeing derivatives used new, interesting, and creative ways. I think that we are constantly sort of pushing the industry to innovate around how can, derivative products benefit from some of the tax advantages as well. Before I joined Tidal, I was on the authorized participant side of the world, and we worked to build out in-kind option transfers. So obviously that is something that can help provide some of the same tax benefits that you see in the classic equity and fixed income space. And then as far as like room to grow, right? I mean, launching an ETF always has some element of luck in your timing the markets, right? But obviously now the US is in a higher interest rate environment. And I was doing some review of some of the stats this morning. And there's still only roughly, 25% of the AUM in the US ETFs is in fixed income product. So I think that we're going to see a significant growth in fixed income type product in this current environment where interest rates are a little bit more juicy than they've been in the last, 10, 15 years. So yeah.
Yeah, very interesting. Yeah, nice to get everyone's perspectives on this. I think the next thing I think is worth going through is just around tax. So obviously it comes up a lot around the tax advantages of various different wrappers. I think just to stay kind of on topic for the purpose of this webinar, it would be good to, I guess, go over, what are the key differences and advantages, disadvantages of, UCITS versus the US counterpart. So I know, Jason, do you want to go first, for example?
Yeah, maybe I should go first because it's a bit simpler than Brittany's answer is going to be, I think. Yeah, so in Europe, the main tax advantage for an ETF, this is, I think you have to use this ETF, is you are domiciled in Ireland and you are UCITS, so you tick that box and you're an ETF. You can avail of the Dublin tax treaty with the US, and you only get 15% withholding tax on your US divs. If you're just a mutual fund in Ireland, you'd pay 30% withholding tax. There is a tax advantage. So if you've got significant assets in your portfolio, so say it's a global portfolio and you've got half the assets in the US, it can be very worthwhile being in Ireland and being an ETF to get the better withholding tax. So there are some advantages there. I don't think they're quite as powerful as what Brittany's about to talk to us about, but certainly there is that benefit here in Europe. We actually have a paper on that. If you want to go to the website, I think we've got a paper you'll be able to find. If not, again, just get in contact. I'll send you a short paper just explains how that works.
Yeah, I'll pick that up from there. So, I mean, obviously the biggest draw in the US has been managers looking to provide tax alpha in addition to their strategy alpha, right? And so in a classic example, you can use this in-kind creation redemption mechanism to offload your taxable gaining lots and rebalance your portfolio. A lot of times, maybe mutual fund managers or others feel like they're maybe locked into a position because it's done really well, but they have a view that maybe they want that security out of the portfolio because maybe they feel it's at the top, but they're hamstringed by triggering a capital gains distribution intra-year to change out of that position. So what we can do in the ETF wrapper really allows us to offload taxable gaining lots while still at the same time harvesting losing taxable lots. So we can build up a loss carry forward and then offset any incremental gains that happen, maybe because you need to rebalance the position quickly, or maybe there was something that prevented the in-kind transfer from happening, such as, being in an over-the-counter derivative, or for example, then we can pin that gain against the loss. So there's a way, I think the stat is 94% of US listed ETFs have never distributed capital gains. The 6% that have are really your commodity type funds. And this advantage applies globally, right? I would say that the one difference is that income is still taxed at the normal income rate. And then on the way out of the ETF, wherever you are in the world, the capital gains tax would still apply there. So it's not necessarily tax avoidance. It's absolutely tax deference. The portfolio as a whole will still, the end investor still pays tax on the way out of the ETF at their expected tax rate. But there's a way for active managers and other managers to rebalance the portfolio without triggering distributions of that tax when the position has done well.
Makes sense. Yeah. I'm not an expert on tax, so I'm not going to make any further comments there. I think we could perhaps jump to our next topic. I'm just going to maybe kind of lump the next two together and discuss, the sort of the process from an investment idea to an index to an ETF, and also any advice to any players looking to enter the space. So I could potentially start just with some comments from my side. I mean, the main thing, to consider when entering the space, I think, is, do you have a solid investment idea or a strategy? And, determining whether or not it's going to be viable is very important. And a large aspect of that is, seeing what else is out there in the market. So do you have a differentiated strategy, or do you perhaps have an advantage with an existing client base, or superior distribution capabilities? You obviously need to have some sort of plan and advantages to make your product stand out. I mean, in terms of the process of going into the market, I mean, people who come to us typically might have a strategy or idea, but don't really know where to look next. So, I mean, one area where we're very helpful is helping design and sort of refine the strategy specifically for an ETF wrapper. So there are a lot of considerations around liquidity. So making sure your strategy, filters out any securities that might be ineligible or not, possible to hold in an ETF, ensuring that the index, fits UCITS criteria, filtering out any, for example, geographical regions or markets that might not be available or liquid enough. So there's a lot of things to consider when kind of refining your idea and ensuring it's viable to run as an ETF. I think that's That's the kind of main points from my side. Do you, Jason, for example, do you want to go through just any advice to players looking to enter the space? What are the main things to look out for? And
yeah, sure. Yeah, we have all extremes actually. We have people that come to us with a fully baked idea, got an index in their pocket, ready to go. We start building tomorrow. Happy days. Sometimes people come to us with just a kernel of an idea, and they haven't even spoken to an index provider yet, and we help them with a lot of consultancy around that, and then introduce them to people like yourself to start the index building process. It doesn't take as long as you think either. I mean, you get these things done in 6 weeks maybe, from having an idea and turning it into something real. We can sometimes start our build process before the index is completely finalized. You can make some small tweaks later, as long as by the time we put the final submission in, you got some link you can click on, or the Central Bank of Ireland would click on a link to make sure they can see a live index somewhere. But we start building before that. But yeah, the key thing is, people always ask us, what's missing, what's next. Obviously there are things we can talk about, themes and where the flows have been. We've got all the data to show you that. But I think the most important part is to try and stick to what you're good at. I mean, if you're an asset manager, you exist for a reason. You exist because people like what you're doing, they like your strategies. So best to stick with that. Coming down to say, oh, what's the next theme? Let me come up with the next theme. Try and flip a coin that way. You can do, but I think stick to what you know, and we can help you with some of that journey by providing data on where the flows are coming from, where the flows have gone. We can do market research for you as well. We can we have partners where we can pay for a bit of market research in different countries, ask different people to respond on how much they have in their portfolios of certain strategy types or what they're looking to do in the future. So we can help with all of that.
Yeah, I mean, I echo that. I think, sticking to what you're good at is definitely a part of it. It's funny that you mentioned, I could jump on the theme bandwagon, but you're never going to be first if you're just looking to copycat someone else's idea, right? And we've seen a specific advantage in the US. If you're a first mover, the first to bring something unique to market, you're going to reap the benefits of being first. So get your creative brains on. I think that what we would say, there's two big determining factors to success in the US ETF market. Number one is having a product that resonates with people, that's simple to describe. And I would say that there's a lot of things that can fit in that category, but the main question you want to ask yourself before you get into the space is, what problem does this solve for investors, right? Because I think you can build the rest of your business plan around the answers to that question, including distribution and sales. If you have a product idea, an investment thesis that will solve a problem, then it's going to help round out the rest of the business plan before you get into the space. I think the second biggest determining factor for success in the US ETF market is seed. So bringing an ETF to market without sort of committed investment dollars in it is going to be much more challenging. And I think Jason mentioned this earlier, right? The march of 0 AUM to, let's say, 20 million in AUM is extremely challenging. You have very little track record. You have very little confidence from investors in your product. And anybody who is going to give you an investment is going to look at the AUM of the fund and say, well, I'm not going to put in more than 10% of that, right? So you're talking the difference of 10% between 1 million and 20 million is significant size in the ticket that they would put into the fund. So considering those two factors very specifically, and then leveraging experts like those of us on this call. I think one of the refreshing things that a lot of times people don't talk about in the ETF space is that because we have to operate as an ecosystem, there is a very friendly environment that you will come across in this space where we're all very much focused on sharing information and being collaborative, and not letting people make some of the same mistakes that either all of us have collectively made in the past, or our clients, or our partners, or our prior firms. We're continually trying to push the boundaries in the right direction, and leveraging us as experts can really help round out an idea, even if it's only conceptual at the time. I think all three of us have mentioned that we have, versions of helping you refine that strategy and really dial into what will resonate with investors, whether that's based on themes or current data, or just based on the problem you're trying to solve, and then structuring it in a way that protects your IP. So that's what I would say as far as like what to think about as you're getting into the space.
Yeah, makes sense. Makes sense. Yeah, so I think we're coming up on the hour now. So I think we could potentially start to wrap it up here. One final point is just maybe if all of you could just give some information on how to best get in touch, and if there are any interested parties on the line. So yeah, just from our side, you can email us at contact@indexone.io or just visit our website. There's multiple ways to get in touch if you're interested in building an index or interested in accessing the market in any other way. And yeah, Jason, you can go next.
Yeah, thanks. Yeah, thanks for having us today. Yeah, you can come to us through the website. You can click there, click through the white label section or just the general section. That'll get through to me either it's info at HANetf or white label at HANetf. I'll probably send an email out to everybody who's here today anyway, and just give you an option to click on there and hear more from us, and get hold of any collateral you want to get hold of. But yeah, it's been great being here, and I guess just closing remark is we can get you a fund out in 10 to 12 weeks. We've got 300 years of experience, so there's not much we haven't seen. So yeah, just give us a call if you want to talk more. Many thanks.
Yeah, echo that. I mean, thank you so much for joining us today. I hope that this was informative and you learned some, but maybe we left you hanging to learn a little bit more through contacting each of us. You can find our contact obviously at tidalfinancialgroup.com. There is a build an ETF button. You can select through that and give us your contact information. We will reach out. Or similarly to Jason, obviously we will be sending an email after this meeting so that you can kind of click to book some time that way as well. But we really appreciate your attention, and we're here to help be your team of ETF nerds for anything that you need in the space.
Perfect. All right. Well, yeah, thanks to everyone who dialed in. I hope it was interesting, and thanks Jason and Brittany as well for your inputs.
Great.
You're welcome.
All right.
Have a good day.